Well, it's election day, and I hope you get out there and vote. So what we're going to talk about today, what you're going to learn today is I have everybody saying, Dan, you're FOMO in real estate again. Well, guys, I'm really not. Let me just explain to you quickly about how I got on YouTube. So I've been in the mortgage business for about 34 years. I used to advertise on Christian radio in Chicago on 2 different radio stations. And that was what launched me into kind of getting out there other than cold calling people and everything else. So what happened is the radio stations started pushing all my data into podcasts. And then I started recording some stuff and putting it on YouTube. And it kind of went from there. I started building an audience all over the country. Then I got federally chartered. And now here's where I am today. So that was my whole, reasoning or how I got to YouTube. But my passion has always been this. I would love to have people, especially millennials, more educated financially. So when I got out of college, I didn't even know what a mortgage was. And I went to work for a mortgage broker, and that's what started my career. Thus, how I got involved in real estate and everything else. I do have an economics degree. I control all my own investments, so I know how to research investments and so forth. So what I wanted to do is share my information with you guys. So a lot of people are saying I'm pumping FOMO right now in real estate. I'm not. So what I'm going to talk to you guys about today is no matter if you're looking to buy a house or rent, how do we get you in a position actually to decide which one to do? And then also, let's dig in on the pieces of the puzzle when it comes to, even if you're looking to rent somewhere, you're going to need good credit and you're going to need some money down because they're going to want a first and last month security deposit. And, probably some other money just to hold depending on how good or bad your credit is. So after this piece of the video, I will go back and do my normal video going over the economic new calendar for today. We know it's election day. That's basically the biggest event today. So we know what that is. And I'm just going to show you at the end of the video where mortgage rates are. But where I want to talk about today is getting you in a position if you're looking to rent or buy. So let's look at it this way. If you really are interested in either or, you need to know where you're going to live. Okay, so that's the first piece of the puzzle. You got to kind of have an idea where you're going to live. And then from there, now the ball starts to roll. So the first thing we want to talk about is some mortgage basics. And I won't even say mortgage basics because this is also if you're looking to rent somewhere. So we're going to go down through here and there's some just elements here. I'm going to go through some of the mortgage basics. I'm going to explain to you if that's a mortgage term or if that can be interchanged with rentals or mortgages. So let's go through some of these questions that are on, or some of these pieces of the puzzle that are on my website. You can get to this piece of the puzzle by going to therateupdate.com and just going over, like I said, to resources and then mortgage basics. So this is what's going to pop up on your screen. So let's go through these and just so I can explain to you each one of these cells so you get it. All right, so the first thing we're going to do is talk about is the application checklist. Well, you're going to need, if you apply for a mortgage or you apply for rents, you're going to have to complete an application. That application is going to consist of a lot of things. It's going to be your data, where you work, how much you make, how much your salaries are and everything else. But one biggest piece of this puzzle is going to be they're going to need to run credit on you. So how do you figure out where your credit is? You probably use a system called Credit Karma, Credit Sesame, or Discover Card, or some free systems that give you a Vantage score, but that's not your true credit score. So I actually created a website called creditscoresandmore.com. You're going to find that right here. What I'd ask you to do, if you're renting, you're buying, I don't care what you're doing, first thing is click here and get your free credit scores. Okay, this is going to launch you to Credit Sesame or Credit Karma. If you don't have an account, please set up an account. It's free. Don't sign up for any of the perks or the upgrades because the free service is good enough. But the one piece that I really would like you to do is go to your true credit score. What this is going to do is you're going to hit that. It's going to take you to your FICO. Okay, what your FICO score is basically the credit score that all lenders use when you're applying for a loan. I don't care if you're getting a credit card, you're trying to get insurance, you're getting a car loan, you're getting a mortgage, you're getting basically anything that they have to pull your credit and give it legitimacy on the credit report, they're going to pull your FICO score. Okay, so that's that part of the equation. I'd like you to just go to the Credit Scores and More, that's the website I created, and click that and get your free credit score, and then also get the My FICO score. That's number one. All right, so now let's go through some more terms here. We got closing costs. Well, you're saying, Dan, if I buy or if I rent a property, I don't have to pay closing costs. Well, I beg the difference a little bit. You're going to have to put up probably a last month's security deposit plus pay rent. Okay, so you're probably going to need 3 months of what your projected rents are going to be. So in my case, it was, I'm using right now is about $1,250. So I'm going to need about $4,000 to $5,000, even if I'm looking to rent. Okay, so that's closing costs. If you're looking to buy, I'm going to go over that with you in a second in a more detailed breakdown. Then we go to appraisals. An appraisal is done to validate to the lender and to you that the price you're paying for the property is accurate. So you don't need an appraisal if you're going to rent, but you're going to need an application, credit, and you're going to have some cost involved, even if you're going to rent. All right, so the next piece of the puzzle that we're going to go down through now, a lot of these terms are referring to if you're looking to buy a property. So if you're not buying a property and you're renting, none of these will come into play, so I'll go through them real quick. Private mortgage insurance. You need private and mortgage insurance if and when you do not put down 20% when you're buying a house. So 20% of the house's value. So for simplistic terms, let's say you're buying a $100,000 house, 20% is $20,000. So if you don't have that much to put down, you're going to need private mortgage insurance. We call it PMI. Refinancing. When do people refinance? Well, let's say right now you close on a house and you got a rate at 7%. And then next year, as expected, a lot of economists are expecting the Federal Reserve to pivot, and they're thinking mortgage rates should be in the range of about 5.5% next year. So if you close today and you get 7.25%, what you would do is look to refinance when mortgage rates go down. Why? So you can save a lot of money. So let's say if your rate's 7 and then the rates go to 5, you can refinance at 5. Dropping your payment down, it'll save you maybe $200, $300, $400 a month for every month. So you're going to save thousands and thousands of dollars if you refinance. Only do this if you need extra cash out or mortgage rates go down. Glossary of terms, we won't go through that. And foreclosure is basically like getting evicted. If you don't pay your rent or you don't pay your mortgage, they're going to boot you out, and that is called foreclosure. Or if you're renting, that is called an eviction. Okay, so what I want you to do next is you're going to go through this, and you're going to go up through here, and you're going to click the calculator, rent versus buy, because we want to figure out in your area that you're looking for, is it more prudent to buy or rent? So we're going to go down through here, and we're going to fill out this questionnaire. So my monthly rent is going to be $1,250 a month. How much monthly rental insurance? What rental insurance is if you didn't buy, rental insurance is since you don't buy the house, you're renting, you don't really need to cover the insurance of the whole building in case it burns. You just need to cover your stuff. So that's called rental insurance, basically content. They call it content insurance. It's fairly cheap. It's probably about $300 or $400 a year. So we're going to put in there $15 a month. Next piece of the puzzle is the inflation rate. Well, we know it's about 8 or 9 right now. The norm usually in history is about 2 to 3%. So let's go on the high end and put in 3%. Purchase price on this is going to be $250,000. My down payment is going to be $8,000, about 3%. I want a 30-year fixed rate. My rate is going to be 7.25. Discount points are going to be, I got to scroll down a little bit, getting to some of the cost discount points. I'm not buying down my rate. 0 origination fees. I'm just going to put in 1 so you guys don't come back and say, well, Dan, you didn't put any fees. That's not realistic. So I'm going to put in there. Other costs, let's just leave that for there. PMI, it's going to be, this factor is going to be 0.45 based on the credit score. Homeowners insurance rate is a percentage of the purchase price. Unlike renter's insurance, you actually need to get homeowner's insurance in the case the house burns. So I'm going to put that as about 0.5% of the purchase price. That's probably a good estimate. Association fees, nothing. Average monthly maintenance, I'll keep it at 100. My property taxes, let's change that to 3,000. Federal and state taxes, 28%. Interest rate, 7.25. Annual appreciation, well, we know houses are appreciating right now at about 18%, but I'm going to use the norm between 3 and 4, and I'll go on the low side. I'll put in 3. How long do you plan on being in the property? 5 years. Because I'm going to say this right here, guys. So if you put comments on, Dan, you're FOMOing, I'm going to say do not buy a home unless you're going to stay there for 5 years. Do not buy a home unless you're going to stay there for 5 years, because you're probably going to lose money, okay? Especially in today's market, because houses are inflated in value. All right, how long are you going to stay there? And my realtor commission. Guys, you don't have a realtor commission if you buy the property. So let's just leave this out for right now, because I'm not, well, you know what? Let's put it in. I'm going to pay the realtor 3% when I do sell the property. Okay, so let's do the calculation button. You hit calculate. What's going to happen? It's going to pull up This is the rent versus buy calculation. This is what you're going to do once you complete that questionnaire. So we're going to go down through here. Remember, our rent was $1,250 a month. So that after a 5-year period, I'm going to spend $80,000 on rent. $80,000 on rent. Yikes. You don't realize how much it is until you really break it down or multiply it throughout the years. Versus if I'm looking to buy a $250,000 house, putting $8,000 down, 30-year term, 7.25, here's what it would be. So let's break down these numbers and see what the results are. So I only have this cost if I'm renting, but if I'm buying, I got total interest paid. Yikes, $85,000 in interest over 5 years. That's nuts. Closing costs, $3,000, property taxes, $16,000. All these costs, even the selling of my house, and I didn't sell it, coming to $133,000. Okay, so you're thinking, well, shit, Dan, I just won. I'm going to rent forever because it's going to save me money. Well, not necessarily, because what are we trying to do? We're actually trying to build wealth and actually get tax benefits like a lot of other wealthy people. So let's go down through here, and what's going to happen? Well, we're going to get a tax savings, okay, because there's tax consequences or benefits when you're buying a property. And let's not forget, we also are gaining value in our house via appreciation. And I just use the 3% mark. Just think of those that are sitting here for the past 2, 3, 4, 5 years that had 18%, 20% appreciation on their homes. How far is this number going to be skewed? So then when you look down at the bottom line, cost of renting, $81,000, net cost of buying, $64,000. There it is. Okay, so this is going to be different no matter where you go through the economy, no matter what state you go into or county or city. So you need to do this on your own. It happened to be that this one came out that it is better to buy. It's not always that easy and that simple. So that is my conclusion for today on teaching you guys if buying is right for you. So without further ado, why are you really here? Well, you're here because of this. What in the world's going on with mortgage rates? Okay, so let's get into this. We have the election today. There's not really much on the economic calendar today. You can see there's nothing. Thursday is the day. Thursday, we're going to have huge volatility in the markets. But that being said, let's get over to where mortgage rates are. Mortgage bonds right now are trading. They're up based on the election results they're in so far. So far, those numbers are looking good to people and investors. So they're pushing mortgage bond prices up. Okay, so let me explain what's on your screen right now. What's on your screen right now is the mortgage-backed security bond that trades on Wall Street. It is the biggest factor in your mortgage rate. We don't use treasury bills. We don't use anything else. It is the mortgage bond. So what you're seeing on your screen is the price of the mortgage bond. So all you need to know here is if the price is going up, which we see right here, plus 16, means mortgage rates are going down. When's the last time you saw mortgage rates go down? So we have a nice read for today. The reading so far down through here is basically positive. So that means this number should continually go up throughout the day, and there's really no economic news, but the election today is going to play big roles in all of this. Where are mortgage rates? Well, here they are. These are mortgage rates. These are the top 6 products people use when they're buying or refinancing a property. These are the national averages, and they're posted in my Mortgage News Daily on a daily basis. If you want to get this newsletter, subscribe down below. If you want to get my newsletter that incorporates this and a ton of other things, you can subscribe to my newsletter down below. It's free. I don't sell the data, and you can use it to educate yourself. So that's where mortgage rates are today right here. We're seeing a nice trajectory, wave a little bit off of the highs, but today is a pivotal point. And then Thursday with the CPI number, inflation numbers coming out, it's going to be even a hugely volatile day on Thursday. So that's it for today. If you like my videos, all I ask you to do is give us a thumbs up, subscribe down below, click the bell every time I post a video, you get an alert. Also, don't forget, if you listen to podcasts, just search in the podcast that you listen to for Dan Frio or the Mortgage Update with Dan Frio, and you're going to find this episode and all the other ones that I've produced. Also, my radio shows. So check it out. I think you'll find some enjoyment there. Plus, they're not only entertaining, they're educational. So thanks for watching, guys. God bless. I'll see you later. Bye-bye.